check the stats. Yeah, I got a couple. I don't drive the ball. Nah, I never fumble. I'm the MVP. Now I feel like Russell.
Alright folks, welcome back to another edition of Who's Ye Boy Trades. Let's talk about these SPX levels coming into the week of 11/7. Remember, we got the midterms on Tuesday. We want to watch the order flow, see how the market reacts to the elections. We might not have the results till Thursday or Friday potentially in some states, but I think we should have a good idea of who's going to control the Congress after Tuesday. So this week, the levels to watch on SPX for option trades. We had a nice squeeze out on put holders on Friday. Coming into the week leaning bullish, but I want to see SPX regain acceptance over 37.94 or 38.05 on futures. So you can see this 37.94 level. I've got a key level, to regain acceptance over to try and push back up into these higher levels. You can play these levels using SPY as well. 38.36 will be my short-term target. So we got 38.36 right here that we're going to target on SPX in the short term after Friday's squeeze out. We do still have the weekly high of 39.14 on SPX as well. And up here, obviously, we had a big old rejection up here, so we want to look for sellers to come in. We could possibly get a nice trade on some puts up there if we do reach that level once again, at least for a day trade. Not something I want to definitely try to short long term, but definitely could get a decent day trade up there. We do still have that weekly high that I obviously will be watching. The order flow will be very important to watch, though, like I said, as we push into these higher levels. On the downside, I'll be watching 36.90 closely. That's really 3700 to 36.90 down here on SPX. So we want to definitely be watching that zone more than anything. If we do break down there, we want to look for that to hold. Order flow obviously is once again important when we get down there. We want to see buyers stepping in if we do reach those levels. This is the 3700 is that big psych level though. Obviously we've tested that a couple times on ES, so 3690 to 3700. We definitely want to watch the tape and see how we react down there. As far as that big psych level, we can kind of watch that, but if we were to give up that level, we got additional support down at 36.69, 36.24, and 35.70. As far as the 2-day balance, it's within 37.94 to 36.95. Our 3-week balance has traded between 36.44 to 39.14 at the extreme high on SPX. Ultimately, I still want to see a rally to 42.21 to fill both upside gaps into end of year before looking at shorts again as far as swing trades to make new lows next year. I know I've been pretty bold looking for mostly upside and opining that the 2022 lows are in, but I do know and fully believe that this bear market is not over. So don't take me as I'm saying a new bull market starting. I just think the 2022 lows have been made, and you can see the current intraday low down here on SPX at 34.91. I do believe that's as low as we're going to get. You can see it had an excess low, extreme low down there, but we did pull it back up fairly quickly and squeezed right back up into this balance that we had down here. 2023 can be a nightmare, taking us towards 3,000 or 3,100 on SPX and ES. But as far as this year's concerned, looking at breadth along with the VIX action lately instead of price, that's kind of what's led me to believe that the lows are in for this year. But that can always change with price action, and we'll see how people are positioning this week after the midterms. All right, so let's take a look at a couple other battered stocks from last week. Tesla kind of took it on the chin after it got that rejection up at 237. 236 was a great short level if you caught it. Really, you could have got in around 233.63 when you got over this previous wick and kind of pushed up, and kind of just planned on getting short up here with this fake breakout. So that was a nice trade if you caught it. However, I do think we're due for a bounce now that we're back down in this demand zone. When we had that excess low, so far we have held these previous lows. We didn't come back down and test the excess low yet, though, so I will be watching that in the short term. As far as TWLO, this thing, they just got battered on their earnings. We're trading, at levels we haven't seen since 2018. 5 years ago, 2017, I've got some levels marked off, like 33.50. is definitely where I will look to be buying some Twilio. I think this could be good for an upside trade. I think they kind of overdid it. I mean, we saw this and Team, which is called the name of the company's Atlassian, just completely sell off after earnings on a little bit of a warning about their growth not being 30% year over year anymore, which obviously in this macro environment, what do you expect, right? But I do think that we can catch a nice trade off these levels down here, so I will be watching that. We are right on support down here at around $43. So I'll be keeping my eyes on that. Let's talk a little bit about what the news said. I mean, it was just a nightmare situation for Twilio. Headlines: There's new trouble brewing in cloud stocks. Twilio and Atlassian issued growth warnings. Last week, both Microsoft and Amazon sold off after reporting moderating growth from their market-leading public cloud businesses, which was actually going to be 2 weeks ago now. Azure and Amazon Web Services. But a new batch of earnings reports suggested the threats of an economic slowdown are hitting a wider circle of enterprise software companies. Alas, the sell-off in cloud software that started a year ago might not be finished. Now, I mean, obviously, you could just look at these stocks. I mean, Twilio was trading at almost $460 at one point before it rejected back down to like $410. It did build some value in the 380s for a while, but I mean, look at this. This is just a falling knife that hasn't stopped. From 2021, 1 year of just straight selling off with some slight bounces here and there, but just talk about a nightmare for investors. I mean, if you're a trader, this doesn't really bother you too much, but anybody that bought, on this ride up and did not get out, they're just getting brutalized, and it's unfortunate for anyone that's still holding this stock, hoping for a recovery. I do think over the long term, this is a solid company. If you're picking up at these levels down here now, between that 35 and where we're at right now, I think this is a decent buy down here. I like Twilio in the long term, and I've always have. But obviously, I did not hold it. I actually sold some shares. I bought it back in 2019 on this ride up. So I did sit through some downside, but eventually I caught a big ride. I took some off on the way up, all the way up. And then, I sold some shares up here, and I held it for a while, let it come down. I think I got out finally when we lost the 250 level again, so right in this area on this push down under 238. So ultimately, I got out, and now I've actually started accumulating again down here. I did accumulate some, when we were still over 60, so unfortunately those got beat up, but luckily I did not grab a large position. That's why you kind of want to dollar cost average into these if you're starting to look at them again now. Because what's low can always go lower, and we've seen that time and time again in this bear market. But yeah, I'm definitely going to be looking for a trade on this from these levels down here. If we could get any type of upside going, I think we could push it back up into the 60s at least this year. So that's kind of what I'll be watching. Back to the news, though, that kind of sucked the life out of them. Late Thursday, shares of both the communication software company Twilio and the project management platform Atlassian Team were pummeled on worrisome commentary about the near-term outlook. Twilio was down 35% Friday to 42.24. Atlassian was off 30% at 121.09. Twilio provides tools to help companies communicate with customers via messaging, email, voice, and video. Earlier this week, Bank of America Global Research Analyst Michael Funk double downgraded the stock to underperform from buy on concerns that Twilio's business is slowing and seeing new pricing pressure. For the third quarter, Twilio posted revenue of $983 million, up 33%, with a loss of 27 cents a share compared with street consensus estimate of $972 million and a loss of 36 cents. So once again, they beat their earnings, but the outlook was the concern. Twilio sees fourth quarter revenue ranging from $955 million to $1.005 billion, up 18% to 19% from a year ago, but shy of the street consensus at $1.07 billion. So they're slightly off, and they're still looking at 18% to 19% growth from a year ago. But in this type of market, when they're losing money, unfortunately, we're going to see these stocks get beat up. Twilio has withdrawn its previous target of 30% annual revenue growth, and that's what just shocked Wall Street, caused a major sell-off. Like many of our software peers, we're seeing negative impacts on our business from the macro environment. Twilio Chief Operating Officer Cosima Shipchandler said in a letter to shareholders, as a result of the worsening macro situation, we also feel it is prudent to pull the 30% plus revenue target today. We still believe we'll deliver attractive levels of growth going forward, but in the current market, we don't believe 30% plus is achievable. So once again, in the current market, it's not always going to be the current market. I still think Twilio has a strong business. I think they have some strong leadership. I think they will recover eventually. We might not see $450, $420 to $450 again, but I think this is a decent trade from down here at the 35 to 40 range. So I will be having my eyes on this one. Atlassian, which makes software, which this is the ticker TEAM, they make software development and project management tools, reported fiscal quarter revenue of $807 million, a hair above street estimates, with a profit on an adjusted basis of 36 cents a share, 2 cents shy of consensus. But here again, the issue is guidance. For the second quarter, Atlassian sees revenue between $835 million and $855 million, shy of street consensus at $879.2 million. And like Twilio, Atlassian's quarterly shareholder letter carries alarming tidings about the business. And here they go. Quote, last quarter, we shared that we saw a decrease in the rate of free instances converting to paid plans. That trend became more pronounced in Q1, Atlassian said in a letter signed by co-CEOs Mike Cannon-Brookes and Scott Farquhar. They added that Atlassian has started to see a slowing in the rate of paid user growth from existing customers. The letter went on to say that the issue boils down to customers responding to the weakening economic environment. The two trends, Atlassian said, are the result of companies tightening their belts and slowing their pace of hiring. In other words, Atlassian is not immune to broader macroeconomic impacts. What makes the situation so troubling is that the cloud was supposed to be one of the last places customers would cut spending in a downturn. The theory was that cloud-based software saves money and makes companies more efficient. But it turns out that there are very few truly recession-resistant businesses in tech or anywhere else. So once again, we saw this actually last time when stocks were selling off. I watched, companies like Twilio hold some strength, Team held some strength, Zscaler, ZS held some strength. They looked pretty good. Now they're not looking so good. On Friday morning, the twin warnings and additional disappointing earnings reports from the internet infrastructure company Cloudflare, NET ticker, and from the e-commerce software provider BigCommerce, BIGC, triggered a broad sell-off in the cloud software sector. Cloudflare is 17% lower and BigCommerce has tumbled 29%. So yeah, we've seen quite the sell-off in the cloud sector. And like I said, I think they might offer some decent trades for the upside from these levels, but I'm not saying to go long for the long term quite yet. I think we could get them a little bit cheaper yet. But these are businesses that are growing. They're just not making money right now. And while we're in a recession, they are not good investments, unfortunately. However, they are tradable. And as the day trader / swing trader, I will be looking for trades in these companies. All right. And finally, it's Sunday evening. The futures market just opened and we gapped down slightly. Not a whole lot. I think Dow lost like 200 points. Looks like ES lost about 27 points now, and the Nasdaq was down about 100. So the headline, of course, every media company wants to be first. Stocks poised to fall on Monday. U.S. stocks are poised to open lower on Monday as earnings continue to pour out. At 6:16 p.m. Eastern Time on Sunday night, Dow Jones Industrial Average Futures lost 218 points or 0.7%, while S&P 500 lost 0.7% and Nasdaq lost 0.8%. Crude oil futures, so that's going to be ticker CL or MCL if you're trading micros or minis, depending on which one you look at, fell 1.8% to 90.81 a barrel. Brent crude, the international standard, fell 1.7% to 96.90 a barrel. This week in earnings, these are the big companies reporting. We got Activision Blizzard, we got BioNTech, Diamondback Energy, FANG, Lyft, NRG Energy, Mosaic. That's one I like to watch. Solar Edge Technologies, SEDG, Take-Two Interactive Software, TTWO on Monday. And then AMC, obviously, that'll be a big one that the apes are watching this week. Constellation Energy, DuPont, Global Foundries, Oxy, TripAdvisor, and Disney on Tuesday. Definitely got my eyes on Disney this week as well. So looking for that to be actually a decent earnings. We'll see what their outlook's like, though, to see what the stock does. Oh, let's see. Thursday, this Wednesday, we got Beyond Meat, DR Horton, Rivian, Roblox, Trade Desk, Wendy's, and Wynn Resorts on Wednesday. Beyond Meat, I laugh at that because they're going to miss their earnings. Unfortunately, for anybody that's holding that, I wouldn't be holding it going into earnings. Well, we'll see how it plays out, though. Maybe they do. I don't think their outlook could possibly be good, but we'll see. That thing's just been getting annihilated, too. That's another stock that's probably down 80-85%. I haven't looked at it in a while, but definitely not something that I believe in personally. ArcelorMittal, AstraZeneca, Becton Dickinson, Brookfield Asset Management, Ralph Lauren, Steris, and Tapestry report on Thursday. Notable economic events. On Monday, the Federal Reserve reports consumer credit data for September. On Tuesday, the National Federation of Independent Business will release its Small Business Optimism Index for October. On Wednesday, the Commerce Department releases September figures on merchant wholesale inventories. So that's some key data to watch this week. On Thursday, the Bureau of Labor Statistics will report the Consumer Price Index for October, and the Labor Department reports the number of workers filing for unemployment benefits for the week ended November 5. On Friday, the University of Michigan releases its Consumer Sentiment Index for November. So once again, Thursday, the big one, CPI. We'll see how that number goes. That'll definitely pick a market direction for us, and we'll be looking to trade that on Friday to play the follow-through. You definitely don't want to be sitting through that when it happens, though, because that's another one that, just like the Fed last week, can get pretty violent on the initial reaction. As far as we got some other news, they're talking about the election a little bit here. Let's see what they got to say. Why a split Congress might not be good for stocks this time around. Markets value certainty. And that's probably not what Wall Street will get when election day is over. And that's true. I already talked about that. We might not know the results for a couple days, so we'll see how that plays out. History and polling both suggest that the most likely outcome will be a Republican win in the House and possibly in the Senate, leaving a divided government. The general rule of thumb, as far as the market is concerned, is that gridlock is good. It means fewer policy changes and less risk to individual sectors such as the healthcare or energy from one party's political priorities. Major tax code changes are also unlikely. That's a big reason for my bullishness going into the end of the year, is I am expecting a divided government to actually help rally the stock market. They're trying to make the argument of why my thesis is a bad thesis. But not always. Split rule also brings the risk of political brinkmanship interfering with the basic functioning of government. Congress will need to compromise on a federal budget and will also have to raise the debt ceiling around the middle of 2023. A government shutdown amid drawn-out fights over either could be painful for investors, at least temporarily. Divided government could also mean a slim chance of fiscal relief in a recession. In an unstable world, having a government that actually works might be a good thing. Uncertainty could be a short-term issue as well. Should it take several days to count results while control of the Senate hangs in the balance, that could be a problem for parts of the market that have not yet joined the Nasdaq in a broad sell-off. The recent asset market instability from politics in the UK and China versus the relative constitutional calm in Brazil points out the near-term risk of next week's U.S. midterms, writes Evercore's chief equity and quantitative strategist Julian Emanuel. Any lack of clarity with regard to Senate control or loud questions about election integrity increases the likelihood that the S&P joins the Nasdaq in the retest of the lows. For now, at least, the possibility of heightened swings isn't showing up in the CBOE volatility index. It dipped to 25 on Friday, which was kind of what we've been watching. It's been weak. It's been definitely trending down, even when the market's trending down. So we've been kind of keeping an eye on that to see if that can get a spike again. But like I said, I'm still looking for a rally at the end of the year, so I'm hoping we don't see that spike in any significant downside. That's quite high for normal times, but near the lowest the index has seen since the late summer. That shouldn't be taken as a sign that things are calming down. However, it just means that volatility could still get a lot worse, which is true. I understand this kind of opinion on it, but you know what? We'll see how it happens. I know the economy is terrible. Our leadership is currently terrible, in my opinion. And things just aren't going well. The macroeconomic outlook's not good. The geopolitical risks are there. So we'll see how it plays out. But as of now, I'm not changing my thesis. I still think we get a bounce, especially if Republicans win the House and the Senate. I do think that will be good for the market, as it has been most times in the past, even during bear markets. And then we'll continue to see that sell-off to new lows in 2023. I don't let the media shift my thesis whatsoever, and it's definitely paid dividends in previous trades I have made. So we'll see how it goes this time. Although, when it comes to trading, being a day trader, swing trader, I can always change my mind if things do start to go that direction. But as of now, I'm going to hold on to being a bull into the end of the year. And that's what I got for this video. So once again, thank you for watching. Be sure to smash the like and subscribe button. Remember, check us out on the Discord, Bullprint. I'll leave a link in the description to all my videos so you can join us for that free week trial. Come check us out. Give it a ride. We got some great analysts. We got a great community. Voice chat all hours of trading hours. So just come check us out. See how you like it. You get a free week trial, so if you don't like it, you can always leave. You don't have to pay a dime. Once again, thank you for watching. I love y'all. Peace.
Run it. I can't take take no loss. I don't even know what it costs. I hit the ground then I go off. Yeah, hit the ground then I go off. Yeah, I can't take no loss. I don't even know what it costs. Yeah, I hit the ground then I go off. Yeah, hit the ground then I go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my